Your insurance quote is $10,000. Your down payment is $3,000 and your credit score is 0. But there are 5 financing hacks that will get you approved in 24 hours without a single credit check. Your insurance quote is $10,000. Your down payment is $3,000 and your credit score is 0. You think you are disqualified from premium financing, and your trucking dream is dead before it even starts. Here is a hidden truth that 90% of new authorities never discover. Many premium finance providers do not care about your personal credit score. They care about your revenue strength, your bank activity, and your business plan. Some lenders offer financing with no financial information required and no credit check at all, simply because your insurance policy is their collateral. If you default, they cancel the policy. They are not gambling on your credit. They are gambling on the insurance company's refund. Your survival depends on knowing which lenders work with new authorities and how to present your application to get approved instantly. You get your insurance quote. You are relieved. You can afford the monthly premium. Then your agent tells you the bad news. You need to pay 20% to 30% of the annual premium upfront. That is $3,000 to $10,000 or more just to get your policy started. You do not have that kind of cash. Your truck is ready. Your authority is approved, but you cannot afford to start. Here is the arcane truth that 90% of new authorities never discover until it's too late. The upfront down payment is the single biggest barrier for new carriers. New authorities are considered high risk because they have no loss history, limited verifiable commercial experience, and no established relationship with the insurer. The insurer demands a large down payment to protect themselves. Your dream is dying because you cannot afford the deposit, but there's a way around it, and most carriers never find it. You have no credit history. You have never had a business loan. You assume that means you cannot get financing. You give up before you even try. Here is the unsettling reality. Most premium financing approvals are based on revenue strength, not credit score. Lenders understand that many trucking owners have strong cash flow, but imperfect or non-existent credit. They look at your bank activity, your revenue projections, and your business plan, not just your credit score. You do not need a perfect credit score to get approved. You need to show that your business can generate enough revenue to make the monthly payments. The system is designed to help new authorities get started, but you have to know how to apply. You apply for premium financing. You get approved. The lender pays your entire annual premium directly to your insurance company. You do not pay the insurer a single dollar up front. Instead, you make monthly payments to the lender. Here is the arcane truth. A premium finance agreement, PFA, is a short-term loan specifically designed to cover insurance premiums. The lender takes on the risk of the full premium. You repay them in 9 to 10 monthly installments, plus a finance charge. The insurer gets paid in full. You get to start your business without a massive upfront payment. The PFA is the bridge between your dream and your first load. But you have to know which lenders work with new authorities. You apply for financing. You expect to provide tax returns, bank statements, and personal guarantees. You are dreading the paperwork. Here's a revelatory truth. Some premium finance providers offer financing options in minutes with no financial information required. You simply work with your insurance agent to create a quote to the finance provider. Once you sign the premium finance agreement, which can be done electronically, your installment payments are set up. No credit check, no tax returns, no bank statements. Just a simple agreement that gets your policy active. This option is available for new authorities because the lender's risk is secured by the insurance policy itself. If you default, the policy is canceled and the lender recovers their money. The system is designed to help new authorities get started. But you have to know which providers offer this option. You get your quote. You ask about financing. Your agent says, "We don't offer financing." You assume you are out of options. Here is the shocking truth. Many insurers allow you to split your annual premium into 12 equal installments with minimal interest, typically 2 to 4%. The advantage is straightforward. No credit application, no approval delays, and predictable monthly costs that fit your cash flow cycle. This is not a third-party loan. It is the insurer's own payment plan. You do not need to apply for financing. You simply select the installment option when you bind your policy. The insurer takes on the risk of non-payment by canceling the policy if you miss a payment. This option is available to almost every new authority, but your agent has to know how to set it up. You need more than just insurance financing. You need cash for fuel, maintenance, and payroll. You think you need a traditional bank loan. You assume you will be rejected. Here is the shocking truth. Working capital loans are short-term business loans designed to help trucking companies pay insurance premiums on time without disrupting daily operations. They are short-term business funding used specifically to cover the upfront cost of your insurance policy. Many working capital loans focus on revenue and bank activity instead of credit scores. If your business has revenue, you can get approved. The working capital loan is a lifeline that keeps your truck on the road. But you have to know which lenders specialize in trucking. You are a new authority. You have no loss history. You have no verifiable commercial experience. You're classified as high risk. Here's the gut-wrenching truth. Being a new authority means you'll pay a higher premium and a larger down payment. New authorities are considered hard to place because they have limited or no loss history and limited verifiable commercial experience. Your premium will be higher. Your down payment will be larger. Your financing will cost more, but you can still get approved. The key is to work with an agent who specializes in new authorities and knows which lenders accept high-risk borrowers. The system punishes new authorities, but it does not exclude them. You get your quote. You see the down payment requirement. You assume it is fixed. Here is a devastating truth. New authority owner-operators can expect to pay 15% to 25% of the total annual premium up front. Experienced truckers with a clean record may pay closer to 10% to 15%. The down payment is not fixed. It is negotiable. If you have a strong business plan, a clean driving record, and a good relationship with your agent, you can negotiate a lower down payment. The insurer wants your business. They will work with you if you show them you are serious. Your down payment is not a barrier. It is a negotiation. You get financing. You make your first payment. You assume everything is fine. You miss a payment. Here is the arcane truth. Premium financing agreements have strict cancellation terms. If you miss a payment, the lender can cancel your policy immediately. You lose your insurance. Your authority is revoked. Your truck is grounded. Your business is dead. The cancellation is automatic. There is no grace period. The system does not care about your explanation. It only cares about the payment. Your survival depends on making every single payment on time. The financing is a lifeline, but it is also a trap. You get financing. You see the monthly payment. You assume the interest rate is low. Here is the unsolved mystery. Premium financing comes with finance charges that can range from 2% to 4% or more. These charges are added to your monthly payments. Over the course of a year, the finance charge can add hundreds of dollars to your total cost. The finance charge is the price of access. You are paying for the convenience of spreading your payments over 9 to 10 months. The finance charge is not hidden. It is disclosed in your premium finance agreement, but most carriers never read the fine print. Your survival depends on understanding the total cost of financing. You have a poor credit score. You assume you cannot get financing. You give up. Here's the overlooked truth. Poor credit history is a factor that can increase your insurance costs, but it does not automatically disqualify you. Many premium finance providers focus on revenue and bank activity instead of credit scores. If your business has revenue, you can get approved. The lender's risk is secured by the insurance policy itself. If you default, the policy is canceled and the lender recovers their money. Your credit score is not the only factor. Your revenue is more important. The system is designed to help new authorities get started, but you have to know how to present your case. You have no insurance history. You have no loss history. You are a new authority. You're automatically classified as high risk. Here is the ruthless reality. New authorities are considered high risk because they have no verifiable commercial experience. The insurer has no data to predict your risk. They assume the worst. Your premium is higher. Your down payment is larger. Your financing is more expensive, but you can still get approved. The key is to work with an agent who specializes in new authorities. They know which insurers accept high-risk borrowers. They know which finance providers work with new authorities. Your survival depends on finding the right agent. You ask your agent about financing. They say, "We don't offer that." You assume financing is not available. Here is the insidious truth. Many insurance agents do not know about premium financing options. They do not mention it because they do not understand it. They assume you will pay the down payment in full. They do not realize that financing is available. You must ask specifically about premium financing. You must ask about in-house payment plans. You must ask about working capital loans. If your agent does not know, find another agent. Your survival depends on finding an agent who understands the financing landscape. You apply for financing. You think you need tax returns. You think you need bank statements. Here is the cryptic truth. Most approvals are based on revenue strength, not just credit score. Lenders look at your bank activity, your revenue projections, and your business plan. They want to see that your business can generate enough revenue to make the monthly payments. If you have revenue, you can get approved. You do not need perfect credit. You do not need years of tax returns. You need to show that your business is viable. Your revenue is your proof. Your survival depends on documenting your revenue. You cannot get financing. You have no credit. You have no revenue history. You think you are out of options. Here is a non-negotiable truth. Invoice factoring allows you to sell your unpaid invoices to a factoring company for immediate cash. You get paid for your loads within 24 to 48 hours instead of waiting 30 to 60 days. You use the cash to pay your insurance down payment. You repay the factoring company when your customer pays the invoice. Factoring is not a loan. It is a sale of your receivables. Your credit score does not matter. Your customer's credit score matters. Factoring is the lifeline for new authorities with no credit and no cash. Your survival depends on knowing about factoring. You have no credit history. You have no cash for a down payment. You think you cannot start your trucking business. Here is a revelatory truth. You can get approved for premium financing with no credit history. Step 1. Ask your agent about in-house payment plans. Many insurers offer 12-month installment plans with no credit check. Step 2. Ask about premium finance agreements, PFA. Lenders that specialize in PFA arrangements pay the full premium to the insurer and collect monthly payments from you. Step 3. Ask about working capital loans, short-term business loans that focus on revenue, not credit. Step 4. Ask about factoring. Sell your unpaid invoices for immediate cash to cover your down payment. Step 5. Work with an agent who specializes in new authorities. They know which lenders accept high-risk borrowers. Your credit history is not a barrier. Your revenue is your proof. Your survival depends on knowing your options. The system is designed to help new authorities get started. But you have to ask the right questions. Your dream is not dead. It is just waiting for you to find the right financing. You get approved for premium financing, and you are relieved that you can finally start your trucking business. You sign the agreement without reading the fine print because you are in a hurry to get on the road. Here is the insidious truth that costs you thousands. Premium finance agreements often include hidden fees that are not clearly disclosed upfront. These fees can include origination fees, administrative fees, late payment penalties, and even prepayment penalties for paying off the loan early. The finance company relies on the fact that most carriers are desperate to get started and will not take the time to read the entire contract. A $500 origination fee can increase your effective interest rate by 5% or more. You must ask your agent to provide a complete breakdown of all fees before you sign any agreement. Your survival depends on knowing exactly what you're paying and negotiating to remove unnecessary fees. You receive 3 financing offers, and you choose the one with the lowest monthly payment. You assume that means you are getting the best deal. Here is the overlooked truth that costs you thousands. Premium finance companies quote their interest rates differently. Some quote a simple interest rate, some quote an annual percentage rate, APR, and others quote a factor rate that looks low, but is actually much higher when annualized. A finance company that charges a 3% factor rate over 10 months is actually charging you an APR of approximately 7.2%, not 3%. The monthly payment might be lower on one offer, but the total cost could be higher because of the longer term. You must compare the total cost of financing, not just the monthly payment. Your survival depends on understanding how to calculate the effective APR and comparing the total cost of each offer. You get financing and you make your first few payments on time. Then you miss a payment because of a slow freight week. You assume you have a grace period and you will catch up next week. Here is the ruthless reality that destroys your authority. Most premium finance agreements have a strict cancellation clause that allows the finance company to cancel your policy if you miss even a single payment. The cancellation is automatic, and it happens without warning. Your insurance is canceled, your authority is revoked, and your truck is grounded. The finance company does not care about your slow freight week. They only care about the payment. Your survival depends on ensuring you have a cash reserve to cover at least 2 months of payments before you start operating. And you miss a payment because of a slow freight week. You assume you have a grace period and you will catch up next week. Here is the ruthless reality that destroys your authority. Most premium finance agreements have a strict cancellation clause that allows the finance company to cancel your policy if you miss even a single payment. The cancellation is automatic, and it happens without warning. Your insurance is canceled, your authority is revoked, and your truck is grounded. The finance company does not care about your slow freight week. They only care about the payment. Your survival depends on ensuring you have a cash reserve to cover at least 2 months of payments before you start operating. You get approved for a premium financing, and you finally start your trucking business. You assume the hard part is over, and you can relax. Here is a revelatory truth that separates successful carriers from those who fail. Financing is a tool, not a solution. Your goal should be to build a cash reserve so you no longer need financing. You must treat every month as an opportunity to set aside money for your next renewal. You must track your expenses carefully and identify which lanes are most profitable. You must also maintain a perfect payment record with your finance company because your payment history will determine whether you qualify for better terms in the future. The carriers who succeed are the ones who use financing as a bridge to financial independence, not as a permanent crutch. Your survival depends on viewing your financing as a temporary solution and building your business to a point where you no longer need it. If you want the exact premium financing comparison calculator and the complete list of lenders that approve new authorities with no credit history, drop finance in the comments below. Everything else is in your hands. Verify first, finance second. If you found this breakdown helpful, subscribe to New Authority Trucking Insurance Guide on YouTube for more expert insights, step-by-step compliance guides, and hidden strategies to protect your trucking authority. I release new videos daily at 6:30 a.m. and 8 p.m. to help you save time, save money, and stay compliant with FMCSA rules without expensive consultants. Your subscription ensures you never miss the next critical breakdown because your authority deserves the right protection. Stay safe, stay legal, and I'll see you in the next video. If this video helped you, consider subscribing to New Authority Trucking Insurance Guide on YouTube. I break down FMCSA rules, insurance traps, and compliance hacks so you can build your trucking business the right way. New videos drop twice a day. Don't miss the one that could save you thousands on your next renewal. I'll catch you in the next one. Disclaimer: this content is for educational and informational purposes only and does not constitute legal, financial, or insurance advice. FMCSA, DOT, and insurance regulations vary by state and situation. The strategies shared here are based on publicly available information and general industry practices. Please consult with qualified legal professional, certified insurance agent, or FMCSA authority for specific guidance regarding your unique application, authority, premiums, or compliance matters. The creator assumes no liability for any actions taken, fines incurred, or authority revocations based on this content. Always verify the current regulations directly with the FMCSA and your insurance provider before making any filing decisions.